Welcome to This Explainer. Today, we're diving straight into the hidden psychology of money. We're going to reveal exactly how modern tools can help literally anyone build real, lasting financial security. We've got some absolutely fascinating insights lined up from financial experts and top publications to help us understand not just how to think about our money, but how to actually put those thoughts into immediate action.
Okay, let's kick things off with a question that sounds incredibly simple, but it fundamentally shifts how we view our entire financial lives. Do you know the difference between being rich and being wealthy? Seriously, think about it. Most of us just use these words interchangeably, right? But as we're about to see, they represent two completely different approaches to life.
Financial advisor Mike Cody makes an absolutely crucial distinction here. He points out that being rich often means you're living right on the financial edge. It's all about maintaining this highly visible facade, the high-paying job, the expensive car, the lavish home. But it's precarious. It completely relies on you continuously bringing in active income. On the flip side, being wealthy is about invisible security. It's about freedom. It's built on a solid foundation of asset growth and passive income that just keeps humming along, completely independently of your day-to-day effort. Part 1. The psychology of wealth. To build that invisible security, we first need to understand the human behavior driving it. And Morgan Housel brilliantly illustrates this in his acclaimed book, The Psychology of Money. The core premise here is incredibly empowering. Your mindset matters so much more than your math skills. Housel argues that financial decisions aren't weighed on a spreadsheet. They're shaped by our human behavior, our emotions, and our perspective. You really don't need to be a financial genius. You just need patience and the right behavior. What's truly fascinating is the reminder that real wealth is built quietly in the background. As the Economic Times highlighted in their review of Housel's work, true wealth is invisible. It's not those flashy Instagram posts or the luxury goods you see all over social media. No, it's the savings and investments quietly compounding in the background, entirely out of the public eye. So the big takeaway is that attaining true wealth means transitioning your entire focus. You've got to stop worrying about daily cash flow and visible luxuries, and instead focus heavily on long-term asset growth. True wealth means having a diversified portfolio that generates passive income. It gives you the resilience to weather economic downturns, and ultimately, it gives you the absolute freedom to make life choices without constantly worrying about financial constraints. Part 2. Enter micro-investing. Now, you might be sitting there thinking you need a massive fortune to start acquiring these assets. Well, let's shatter that myth right now. Believe it or not, one single pound or one single dollar is literally all the capital you need to start building that invisible wealth we've been talking about. The financial barrier to entry has completely vanished. This incredibly low barrier approach is known as micro-investing. It basically allows you to make small value investments habitually straight from your smartphone. And a real game changer here is something called fractional shares. Let's say a single share in a company like Meta costs around £450. Well, in the past, if you didn't have £450, you just couldn't invest, period. Today, micro-investing apps let you buy a tiny fraction of that exact same share with just a few pounds. This is completely democratized investing. Think about the old way. It kept everyday people completely out of the market because of prohibitively high costs and massive broker fees. The new way shifts all that power away from exclusive Wall Street institutions and puts it directly into the palm of your hand. You can now gain exposure to a huge range of assets without needing a ton of upfront capital. Part 3. Top micro-investing apps. So, what are the best tools to actually make this happen? Looking at Forbes Advisor UK's data for the best platforms for 2026, a very clear theme emerges. Zero commission trades and microscopic minimum deposits are the new industry standard. We're talking about platforms like Trading 212, XTB, Webull, eToro, and Robinhood. They're offering access to thousands of stocks and ETFs with practically zero barrier to entry. This is exactly what makes building a diversified portfolio so incredibly accessible for all of us today. When we drill down into user satisfaction, Trading 212 really leads the pack. Forbes highlights its seriously impressive 4.6 Trustpilot rating. It stands out as an amazing choice for beginners because it offers a massive 13,000 investment options for that mere £1 deposit we mentioned earlier, and it does it all with no commission or custody fees. eToro and Robinhood score well too, but Trading 212 is absolutely setting the benchmark right now for user experience.
Now, here's a question you should literally always ask when dealing with your hard-earned money. Is it actually safe? Well, it is absolutely vital to note that these top-tier platforms analyzed by Forbes are strictly regulated. Over in the UK, for instance, they're authorized by the Financial Conduct Authority, and your deposits are protected by the Financial Services Compensation Scheme up to £85,000. So you can sleep soundly knowing your growing assets are kept safe and secure within established legal frameworks. Part 4. Building your wealth habit.
Okay, so we have the mindset and we have the tools. Now, we need the routine. To truly transition from just hoping for wealth to actually building it, you've got to automate the process. These 4 automated strategies are fantastic because they remove human emotion from the equation entirely. You can link your card to round up your daily coffee purchase to the nearest pound and invest the spare change. You can schedule a recurring weekly deposit of just £5 or £10. You can set the app to automatically reinvest any dividends you earn right back into buying more shares. And you can use in-app smart robo-advisory tools to keep your portfolio perfectly balanced. You are essentially putting the whole wealth-building shebang on autopilot. As Forbes Advisor UK beautifully summarizes, consistent investing, even in tiny amounts, compounds meaningfully over time. Because at the end of the day, financial success really isn't about perfectly timing the stock market or trying to pick the next big tech stock. It's about the patient, persistent compounding of your money. Even those tiny, seemingly insignificant amounts, when invested consistently and left alone to grow, become something massive over time. It all comes back to patience and perspective. The financial barrier to entry is completely gone. The tools are literally in the palm of your hand right now, and the only psychology you need is patience. So I'll leave you with this. Will you keep watching your wealth from the sidelines, or which of these tiny habits will you initiate today to secure your wealthy tomorrow? The choice is entirely yours. Thanks so much for joining this explainer.